Something big is brewing in the desert, and I had to see it for myself. Word got out that a major Bitcoin conference in Abu Dhabi was selling tickets for just $21, basically pocket change, to pack the house. 21 bucks to rub shoulders with Bitcoin whales and mining magnates? I was skeptical. Was it a marketing gimmick or the start of a crypto revolution in the Middle East? I needed answers. Little did I know, this journey would reveal a shifting power center in crypto that left me absolutely stunned. So there I was, virtually peeking into Bitcoin Manor 2025 in Abu Dhabi, which kicks off on the 8th of December. This isn't your average blockchain meetup at the local co-working space. We're talking 12,000 plus attendees flying in from all over, and a lineup of speakers that reads like crypto's who's who. Even Binance's CZ and MicroStrategy's Michael Saylor are on the roster. Picture that. The CEO of the world's largest crypto exchange and the biggest corporate Bitcoin evangelist on the same stage, in the UAE. Why Abu Dhabi, you ask? Why now? Those were exactly my questions. It turns out Abu Dhabi, and the Middle East at large, is positioning itself as a global Bitcoin hub, and they're pulling it off in style. The conference director, Greg Davis, gave an interview recently where he basically said, people are arriving from everywhere: miners, institutional bankers, tech innovators, you name it, because the UAE leadership has rolled out the red carpet for crypto companies. In other words, the region's regulators and policymakers actually want crypto businesses to set up shop there. Imagine that. While some governments throw up roadblocks, Abu Dhabi is opening the floodgates, and that $21 ticket, it wasn't a typo or a charity giveaway, it was a statement. The organizers intentionally set the general admission price that low to welcome the curious and the everyday folks, not just VIPs. They wanted the expat engineers, the local students, the indie developers, the whole eclectic community in the UAE to come see what the fuss is about. I find that incredibly smart. It's like they're saying, Bitcoin isn't just for Wall Street suits or Silicon Valley geeks. It's for everyone. Inclusivity at a crypto conference? Now that's a twist. All right, let's connect the dots. What makes the Middle East and Abu Dhabi in particular so attractive for the crypto world? First off, policy and taxes. The UAE has 0% VAT on Bitcoin transactions and pro-crypto regulations. Zero tax on crypto trades. Yes, you read that right. It's practically a crypto tax haven, legally. For companies and investors, that's like catnip. No wonder exchanges, funds, and blockchain startups are either relocating to Dubai/Abu Dhabi or at least opening offices there. When the government is on your side, it de-risks a lot of things. No fear that some regulator will knock down your door for innovating. Compare that to, say, the US or UK, where crypto firms often feel like they're tiptoeing through a minefield of regulations. Next clue, energy. Bitcoin mining has one non-negotiable ingredient: cheap, abundant energy. And guess who has energy in spades? The Middle East. This region sits on oceans of oil and natural gas, but it's not just the fossil fuels. They're investing heavily in nuclear and renewable energy projects too. Abu Dhabi, for instance, has a new nuclear power plant online and vast solar farms in the desert sun. Greg Davis pointed out that this combo, traditional and renewable energy, is central to Bitcoin's future because miners are scouring the globe for low-cost power. If you're running a mining operation, the UAE's mix of cheap oil and expanding green energy must look like a gold mine, or should I say, a Bitcoin mine. In fact, one Abu Dhabi-based miner is scaling up to gigawatt levels of capacity, taking advantage of the electricity surplus. The message is clear. The Middle East doesn't just want to trade Bitcoin, it wants to produce Bitcoins by powering the network itself. Another dot to connect. Big money is piling in. I'm talking about the sovereign wealth funds and institutional giants. The Middle East is home to some of the world's largest sovereign wealth funds. Think of them like national piggy banks with trillions of dollars. These funds historically invest in things like real estate, stocks, infrastructure. But now, apparently, Bitcoin is on their radar in a serious way. During my research, I came across BlackRock CEO Larry Fink's recent comments that absolutely floored me. He confirmed that at least one sovereign wealth fund is actively buying Bitcoin on price dips, and others are lining up to do the same. Fink called it a watershed moment for adoption, a fundamental shift in how nations view crypto. And guess which sovereign fund he name-dropped? Abu Dhabi's own Mubadala. They've already invested in BlackRock's Bitcoin ETF. Just think about that. A government-backed fund in the Middle East quietly accumulating Bitcoin, effectively treating it like a strategic asset. This isn't retail speculation, this is long-term, large-scale accumulation. When countries start playing the Bitcoin game, it's a whole new ballpark. It's not just Mubadala either. Everywhere I looked, I saw signs of institutional gravity shifting eastward. The Bitcoin Manor event even created a special whale pass tier for high rollers and institutions. They knew these big players were coming, and lowering the entry barrier for regular folks via that $21 ticket doesn't contradict that. It complements it. It ensures when the big money shows up, the grassroots community is there too. Honestly, it feels like Abu Dhabi is engineering a perfect storm for crypto. Supportive regulations, plus abundant energy, plus big capital, plus community buy-in. As a crypto content creator, I'm practically grinning seeing all these pieces come together. It's like watching a puzzle solve itself. Now here's where the story gets a bit dramatic, because while the Middle East is embracing Bitcoin with open arms, other parts of the world are busy building walls. Case in point, the United States. Even as Abu Dhabi was welcoming Bitcoiners, I saw headlines back home like, popular Bitcoin company faces potential 10-year ban. Wait, 10-year ban? Turns out Washington regulators are trying to sideline one of America's oldest Bitcoin ATM companies for a decade. Think about the contrast. In the UAE, officials are speaking at crypto conferences and encouraging innovation. In the US, a well-known Bitcoin business might get shut out until 2035. It's literally a tale of two crypto worlds, one driving forward, one slamming the brakes. And it's not just that one company. The general vibe in some Western countries has been crackdown central this year. Lawsuits against exchanges, banks, debanking crypto firms, endless regulatory uncertainty. I've lost count of how many times I've read crypto is banned here, or XYZ exchange under investigation in 2023 and 2024. Is it any wonder that talent and capital are looking for friendlier shores? I'm not throwing shade at the West entirely, clear regulation is important, but when you push too hard, you risk driving the innovation elsewhere. What I'm seeing is a pivot to the Middle East for crypto's next chapter. And that might just be the best plot twist for Bitcoin's story moving forward. By this point, I was connecting these dots with my jaw metaphorically on the floor. The rumors were true, but the implications were even bigger than I imagined. We're not just talking about a single conference hype. We're talking about a shift in the center of gravity for Bitcoin. The Middle East wants to be crypto's new home base, and it's backing that ambition with serious moves. As someone deeply invested in crypto, both financially and just, emotionally as a believer in the tech, this got me incredibly excited and a bit anxious not to get left behind. Quick disclaimer before I continue. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Now, riding on that wave of optimism, let me share a cool side story that popped up during my deep dive. In exploring new projects that blend real-world utility with crypto, I stumbled upon Unity Nodes, a new initiative from World Mobile and Minutes Network that a lot of people have been buzzing about lately. Imagine turning an ordinary smartphone into part of a global telecom network and getting paid for it. That's basically what Unity nodes allow you to do. It's like mining crypto, but instead of solving math puzzles, your phone is verifying telecom network data and helping carriers prevent fraud or outages. And you earn rewards in return. Here's how I see it. Unity is bridging the digital and physical worlds. They give you a software license that comes with the ability to connect up to 200 phones, yes, 200, into this network. Those phones do the work in the background, and you, as the license holder, earn crypto rewards. What kind of crypto? You actually get to choose. Payouts can be in Bitcoin, Ethereum, Cardano, ADA, XRP, and more. That definitely caught my attention because it's a form of passive income in crypto that's tied to real telecom services, not just speculation. It's a novel concept, and frankly, I'm here for it. I even decided to take the plunge personally. I purchased a Unity node license. Think of it as buying a software package that grants you those 200 mini nodes. The smartphones. Now, don't get me wrong, I'm not about to deploy 200 phones on day one and turn my house into a server farm. I'm starting small. I'll hook up 10 phones first as a test run. Gotta crawl before you walk, right? If the rewards and the tech perform as advertised, I'll consider scaling up gradually. I opted to receive my Unity payouts in a mix of BTC, ETH, ADA, and XRP, basically stacking more of the crypto I already believe in, but passively over time. It's almost like staking or mining, but via telecom. Of course, I'm keeping my expectations realistic. Could this become a decent little earner? Maybe. Could it flop or have issues? Also possible. Do your own research on this. I'll put the Unity light paper and a rewards calculator link in the description for the curious. I've mentioned Unity in previous videos, so a lot of you already know the gist. The reason I include it here is it shows how decentralization isn't just about finance. It's also creeping into industries like telecommunications, and projects like Unity could be part of the broader crypto story, making the network stronger and more distributed, and putting a bit of crypto into the pockets of regular people in the process. Alright, side quest over. Let's get back to the big picture. The million-dollar question, or perhaps the 100,000 Bitcoin question, is what does all this mean for Bitcoin's adoption and price moving forward? After connecting all these dots, here's my take. When you have entire nations and their wealth funds accumulating Bitcoin, that introduces a level of support and buying pressure we've never seen before. These players aren't day trading. They're thinking in 5, 10, 50-year horizons. So, Bitcoin dips, that might spook retail investors. Those could become buying opportunities for sovereign funds and institutions. In fact, analysts predict that as more big players hodl, we might see stronger price floors and less crazy volatility over time. Simply put, when Bitcoin pulls back 20%, you might have a country's fund quietly saying, "Thank you very much, I'll take those cheap coins," which props the price back up. We could be looking at a future where Bitcoin behaves a bit more like oil or gold, still volatile, sure, but with deeper liquidity and strong hands holding it. Now, I'm not saying Bitcoin will never crash again. It very well could. This is crypto after all. And I'm definitely not saying go all in because oil sheiks are buying Bitcoin. Nope. But I am saying that the landscape of who owns Bitcoin is broadening. It's not just cyberpunks and retail hodlers anymore. It's also governments, mega corporations, and Wall Street titans. That matters. It could mean that the next time we approach all-time highs, the climb might be more gradual and sustained, with big money adding stability. Or conversely, if some of these giants decide to sell, it could be lots of supply hitting the market at once, though I suspect they're in it for long term. The point is, Bitcoin is maturing, and interestingly, some of that maturation is happening in places like Abu Dhabi, a place many in crypto hadn't really considered a year or two ago. There's also the question of adoption beyond price. More conferences and community engagement in the Middle East could spur a wave of new developers, new startups, new users from that region. Think about the population demographics. A lot of Middle Eastern countries have young, tech-savvy populations and tons of foreign workers sending remittances. Crypto can thrive in that mix, offering cheaper ways to move money or new career opportunities in blockchain. So this isn't just about rich funds getting richer. It's about potentially millions of new people entering the crypto ecosystem through education and events like Bitcoin Manor. More users, more developers, more use cases, that's the stuff that makes the crypto network effect explode. All this research and reflection got me thinking hard about my own strategy in crypto. If the last few years have taught us anything, it's expect the unexpected. Who predicted a Middle East Bitcoin boom? Not many. So I'm taking a page from the Boy Scouts, be prepared. Specifically, I have a personal strategy to make sure I can handle whatever the crypto gods throw at us next. Plan A, B, C for exchanges. One lesson from past exchange blowups, looking at you, FTX, is don't rely on just one exchange. I've made sure I'm signed up, KYC verified, and tested out trades on multiple exchanges. For me, it's exchanges like Blowfin and Bitget, which I use via affiliate links that support the channel. You can find those on my website, linked in the description. Why so many accounts? Because sometimes an exchange can go down, freeze withdrawals, or heaven forbid, collapse altogether. If that happens right when you need to make a critical trade or cash out, you'll be glad you had a plan B, maybe even a plan C. For example, if exchange A is suddenly under maintenance, just as Bitcoin is spiking or crashing, I can hop to exchange B or C and get the job done. It's like having multiple exit doors in a crowded theater, just good safety practice. And remember, any exchange I mention comes with an affiliate link that helps the channel. So if you use Blowfin or Bitget via my links, thank you. It supports us, and I always disclose that. Secure your crypto. Another non-negotiable part of my plan is secure storage. I say it all the time, but it bears repeating, not your keys, not your coins. With all this talk of big players and big moves, the last thing you want is to be the person who lost their crypto because an exchange got hacked or your account got phished. I strongly recommend using a hardware wallet for any significant holdings. Personally, I use a ledger device to store my Bitcoin, ADA XRP, all the long-term bags. If you're shopping for a hardware wallet, make sure you buy directly from the manufacturer to avoid fakes or tampered devices. I have a link on my website that goes straight to Ledger. Yep, it's an affiliate link, and it helps the channel, just so you know. Whether you use that or not, the key is get your coins off exchanges if you're not actively trading them. Sleep better at night knowing a hacker would have to physically rob you to get your crypto. And even then, good luck guessing my PIN, Mr. Hacker. Never stop learning. The crypto space moves fast. If you blink, you can fall behind on new trends or risks. That's why I invest in my own education constantly, and I encourage you to do the same. In fact, shameless plug. I run an educational platform called Cheeky Crypto School, cheekyschool.com, link in description. We've got in-depth courses on trading strategies, portfolio management, risk management, all that good stuff. It's designed to take you from zero to hero in understanding crypto markets. If you're interested, check it out. And because you're watching this on YouTube, I've got a discount code for you. Use YT50OFF to get 50% off any course. Learning shouldn't break the bank, right? We also have a free educational Discord, link in the description, where our community chats daily about market moves, news, and strategies. It's a fantastic place to ask questions, share insights, or just lurk and learn from others' experiences. The Discord is totally free. We created it to help people level up their crypto knowledge in a friendly environment. So definitely hop in there if you haven't already. To summarize my strategy, diversify exchanges with backups for backups, secure your assets in cold storage, and keep educating yourself. These steps have served me well so far, and with the crypto world about to get even crazier, if my Abu Dhabi investigation is any indication, I think they'll serve you too. And of course, any link I mentioned, be it exchanges, Ledger, the school, is either my own service or an affiliate link that helps this channel grow. We always appreciate your support, and I always want to be transparent about it. As I wrap up this wild story, here's my big takeaway. I started off chasing a rumor about a Bitcoin conference in the Middle East and cheap tickets, thinking I might uncover some small community hype or maybe a quirky side plot in the broader crypto world. Instead, I stumbled into something far bigger than I expected, a genuine shift in the crypto world's center of gravity. The Middle East isn't just joining the crypto revolution, it's setting itself up to steer it, with governments rolling out friendly regulations, energy giants exploring mining partnerships, and sovereign wealth funds quietly buying the dips while everyone else panics. The Gulf region is positioning itself as a major Bitcoin powerhouse. It's like watching an entirely new chapter get written in real time. For us as crypto investors and enthusiasts, this development is both exciting and kind of humbling. It's a reminder that crypto has never belonged to one country or one culture. And this space is global, fluid, and constantly reshaping itself. Opportunity can come from anywhere. An Abu Dhabi conference, a Kenyan mobile network project, a new exchange in Singapore, or a regulatory shift in South America. You blink and the landscape changes. The key is to stay curious, stay flexible, and never assume you know where the next wave is coming from. 5 years ago, if you'd told me to keep an eye on the UAE for major crypto news, I probably would have shrugged it off. Now I'm literally planning content around it and trying to keep up with everything happening there. Will Abu Dhabi's big crypto bet pay off? Honestly, I think it has a real shot. If adoption across the Middle East accelerates and more countries in the region jump in with real infrastructure and real capital, we could be heading into the next bull cycle with a stronger foundation than the last few. Less hype, more substance, more actual use cases, fewer empty promises. And if Bitcoin's price starts reflecting that stability and long-term commitment, well, you won't hear me complaining. At the end of the day, I'm feeling optimistic. Optimistic about Bitcoin's long-term trajectory, knowing that some of the world's most influential players are backing it for reasons that go far beyond quick profits. Optimistic that the old days of Bitcoin being brushed off as magic internet money are fading as entire nations begin treating it as a serious asset. And optimistic for all of us in this community, because if this momentum keeps building, the ride ahead might be one of the most important periods in Bitcoin's history. We're witnessing a shift that future investors will look back on and say, that's when everything changed. And before I sign off, if you've stuck with me through this whole story, thank you. I hope you found it as fascinating as I did. If you did, do me a solid. Hit that subscribe button and join our little crypto family. I've got plenty more twists, deep dives, and on-the-ground stories coming your way. If you found this journey insightful, subscribe for more stories, and I'll catch you in the next video.